Tuesday, April 27th, 2021, Monaco 64, home of alternative economics and contrarian views. Commodities are moving higher significantly. Copper, corn especially. I personally think they're spoiling the agenda, the Fed agenda, that there's no inflation. And why would that be so? Well, because it's very hard for the central bank to control the commodities market, a real market with real goods, tangible goods that are consumed. Yes, right now they are controlling the monetary commodities like gold and silver, even though silver is a hybrid. And why is it easier for them to control money like gold, a monetary commodity? Well, because it's not consumed, but believe me, it will be triggered, the move lower in the dollar versus gold. It's just a matter of time. I've always thought it would be impossible for fiat currencies to collapse without bond markets collapsing. But that could be changed, because the powers that be, the central bankers, are so crazy that they could pretend that bonds are doing fine just by printing even more and more and buying those bonds and keeping them artificially high, with their yields, of course, artificially low. So governments and the whole deep state, the whole big government scheme can keep going. It's akin to when Baghdad Bob was standing behind American tanks coming into Baghdad and saying that everything was fine. This is what it looks like to me. It's just really amazing. But a lot of people are going to lose out, because yes, those bonds might remain elevated in price and low in yields, but they're going to be worth very little versus real things like corn, like wheat, like copper, even coffee starting to move, and gold eventually, and silver. What we're seeing here is not really prices rising of commodities, it's the dollar dropping. And why is that happening? Is that because there's a lot of supply of currency out there? Partly, there's more supply of fiat currency, not just the dollar, but all the other ones that have been printed ad infinitum. And of course, there's a limited supply of these goods, of these hard assets. We've seen as well the richest men in the world going into hard assets, buying farmland in the last few years, not only Bill Gates, but many others. And they can see this. They're not the wealthiest people on earth because they're stupid. It's because they've been looking into this. They realize that when the central bank creates fiat currency and credit out of thin air like this, with no limit, it will, of course, lower the purchasing power of that currency. And that's what's happening. How long they can keep the bond market elevated is a $1 million question, and we shouldn't really be concerned about it. Yes, bonds might hold on, even stocks might hold on, but I think this is just pointing to a very bad, how can I say, future, not just for the dollar, but for all other fiat currencies. People need to understand that hedging the Federal Reserve note or the fiat dollar with other fiat currencies is a losing proposition. They're all going to sink. I've spoken about this many times. The dollar is at the base of the system, and all the other currencies are a derivative of the dollar. Even the euro, if you go back and dissect the euro into its old European legacy currencies. So, for example, I was looking at the corn price. So let's look at the markets now. I mean, even corn was going up yesterday, and I think it's up this morning already here in London. It's 8:25 a.m., by the way, London time. So let's go through the commodities here on my system. Yes, oil hasn't really moved that much lately. We can see that overnight, though, it's up about 0.5%. WTI crude. We've got heating oil as well, up 0.5%. Gold and silver, of course, are not doing much right now. Palladium, as you can see, is making a new all-time high. Platinum, yes, it has been consolidating. It has broken out from its resistance just above 1,000. That's looking very good as well. Another signal that things are not right. My wife saw a headline yesterday about how people are stealing exhausts, car exhaust, because there's materials like platinum and rhodium in the exhaust pipes. So yes, here in the UK, people are, I think it's gone up by 50%, the theft of these kinds of metals through the exhaust. That's not a good signal as well. So let's look at high-grade copper, part of the base metals group. As you can see, we're approaching the all-time high from 2011, so a 10-year high. The all-time high is at around 462. We are at 450 already this morning. It's up over 1%, as you can see. So copper is and has been a very good indicator of inflationary pressures. I guess the bond vigilantes, the bond market has been basically euthanized by the central banks. Yes, they've been led to believe that there's no inflation. And of course, it's not copper and commodities that cause inflation. They are the consequence. The rising prices of these commodities and the drop in the dollar is the consequence of inflation. That's what you get when the central bank creates money and credit ad infinitum, out of thin air, inconvertible currency, as the old generations used to call it. So let's look at nickel. Yeah, nickel is off its highs, but as you can see, it's starting to pick up as well. It's up 1.5 this morning. Iron ore as well at multi-year highs. Aluminium, or aluminum as Americans would call it, that's also at multi-year highs. Let's look at lead. Lead, not so much. What about zinc? Yeah, that's starting to pick up as well. So base metals doing really well when one might think, well, that's because of China or something to do with the pandemic. But then you look at the soft commodities, and you'd think, well, they're not that related to the base metals, but they're starting to move as well. So let's have a look at wheat. So there's wheat, for example. Wheat is at a 8-year high. Yes, we're still far away from its all-time high. What about coffee? Yeah, coffee has lagged behind. It's still way off its all-time high from 2011, but it looks like we are at 4-year highs in coffee. So coffee is starting to make a move. And now corn, of course. This is quite amazing, the move in corn. I haven't read about the fundamentals in corn, about the planting and the crops or anything. I'm just looking at the price. So here's a chart of corn, a weekly chart, up 5% overnight. Corn is traded on the CBOT, Chicago Board of Trade. It's part of the CME now, but it used to be an independent exchange where most of the agricultural commodities traded. And yesterday I saw a headline that corn was limit up. That's when the exchange stops trading because the market is moving up too quickly. They have a limit down as well, but it looks like there's no tomorrow in terms of this price stopping right now. So what about soybeans? Let's have a look at soybeans. Soybeans, same thing, near all-time highs as well. Lumber, of course, there's been a lot of attention and talk about lumber. It has come off its highs, but it still looks very bullish. Even sugar, New York sugar is starting to pick up, as you can see. Cotton, if you look from last year in March, it has picked up. Yes, we're nowhere near the all-time highs, and we're still below the 100 level here, but that's starting to pick up as well. Lean hogs, as you can see, at multi-year highs as well. So you get the picture. This is not because of a particular event in a particular market, some kind of supply or constraint or trouble with, let's say, floods or crops being like destroyed because of a plague or something. This is a general move in commodities, and I think also the CRB index, which measures the general commodities, that's starting to show as well that the general commodities are moving up. It's not just like copper or corn or something in particular. As you can see here, we've just made a new high, multi-year high in the CRB. I guess this is the highest level since 2018. So that's a 3-year high here, as you can see in this weekly chart. There's still a lot of room to the upside. We're way below the high from 2008 before the '08 crisis. Yes, gold and silver are lagging right now, but if you look at the CRB, it bottomed around the same time that gold and silver did in the end of 2015, beginning of 2016. And commodities really have been starting to motor since the collapse last year in March. And yeah, they're just about to break the high from this period that we've had since 2015 bottom. It's been like sideways, pretty much like gold was forming a bottom between, let's say, 1250 and 1350 around that time. So gold has actually moved before the general commodities, and now the general commodities are actually catching up. Gold has actually in the last few years forecast this move in commodities. Gold is like the canary in the coal mine of inflation. It tells when it's going to happen, and I think that's what it did, and it will catch up. So general commodities, CRB index, and yes, that's pointing to a loss of confidence in fiat currencies. And if the central banks continue their policy of easy money, of zero interest rates, of QE, this is only going to get worse. People are going to withhold supply as well. Producers are also withholding supply of commodities, of tangible goods, because they know that the money is bad. They're starting to wake up to that. So let's quickly do a rundown of the markets right now. Yes, we went through all the commodities, but we'll do our usual rundown. We've got spot gold. Yes, and it's 8:37 a.m. by the way, London. Spot gold is at 1780, so it's down about $1. Range has been fairly narrow, 1773.50 to 1784. Silver's down 5 cents at 26.15. High's been 26.31, the low 26.03. So before I move on to the stock market, let's look at the CME. Let's look at what's happening to the May silver contract. Yes, they've got till Thursday this week. The people who have a position in May to get out of that position or to roll over into the next front month, which is July. So I've got data here. The open interest actually dropped by almost 15,000 yesterday. So we're now at 41,484. So if you multiply that by 5,000, that's still 207 million ounces that could stand potentially for delivery in May. So I expect this open interest to drop in the next couple of days, but it's still fairly high, and we'll keep an eye on it. So now to the stock market. We've got the Dow future up 15. We've got the NASDAQ up 15 as well. The future S&P is up 3. The currencies, we've got the pound down 0.2% at 138.75. The euro is down 0.15% at 120.68. The dollar's a little stronger versus the yen at 108.30. Dollar's up 0.1% versus the Chinese yuan at 647.85. And high-grade copper, as I said earlier, is up 1.5%. WTI crude is up 0.75%. And the 10-year yield, that's unchanged. Crazy that we're seeing these moves in commodities and consequently the move lower in the dollar, and we see no response from the bond market. Back in the day when I was just starting out in the financial sector, the sector that I worked in was government bonds, and I can tell you that if the bond vigilantes at the time in the late 80s, early 90s, mid 90s saw commodities doing what they're doing, bond prices would be dropping right now. People would be selling bonds, but that's not happening because the central banks have destroyed the price discovery mechanism in the bond market. And that's going to hurt a lot of people, a lot of retirees or pensioners who trust fund managers to manage their money for the future. Unfortunately, the fund managers as well are forced by rules and regulations, by the powers that be, to keep 40% of people's money in bonds. It's crazy, and 60% in stocks. That's why I try to stay away from this kind of investment vehicles. Well, I am away from it. I don't have any private pension anymore, and I don't put any money into these so-called fund managers who are supposed to be the best in the business. But best in the business now is the one that loses the least. It doesn't matter if they all lose, it's fine, because they say, well, we all lost, right? And you are the loser by keeping your funds there. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.